What are your thoughts on my Forex fund being charged with a $300 million fraud on retail traders? And what are the top lessons to learn from it?
Man, this is heartbreaking to see initially. But the number one thing that we have to realize is that this will not be the last. So my Forex fund is a prop trading firm where they charge people to sign up. If you pass a trading evaluation, you can get funded to have capital to trade if you don't have capital on your own. Lesson number two, there's no such thing as easy money in any climate. And later we'll talk about what you can do to prevent this from happening to you. And also, if you're with a prop firm currently, we'll walk through some signs on if everything's on the up and up. But thirdly, and the most important, I've said this before, and I don't want to be gruff or flippant, but you have to be so good at trading your own money that you never need anyone else's capital. So in every business transaction, when you sit at the table, you have to know if you are the beneficiary of this transaction or if you're the loser in it. For the most part, and even though this company's been out for 3 years, I never heard of anyone getting funded from them and having capital to trade for a long period of time. So, I mean, if you look at the CFTC report, you can see that they were actively using software to make sure before you got funded, they would destroy your wins. Like they were putting you in at market orders, getting you in at the worst prices so you wouldn't win. Everyone in investing in finance is not your friend. Please be mindful of that. I always say trading has considerable risk. And when you're trading, you're not trading against just other retail traders. You can trade it against prop firms, hedge funds, banks, some of the smartest people, but companies also like this that are preying upon the weaknesses and hopes of people. So please be careful.
Yeah. So for those who are not in the know, because even when I looked at it, I'm like my Forex did a little research on it, and so let's just break this down a little bit further. So the CFTC is the Commodity Futures Trade Commission. For those who are not in the know, my Forex was founded in November of 2021. They have 135,000 customers and have taken in over $310 million. Well, how if they weren't funded? Here's how. Right, the complaint alleges that the traders' global activity actively minimizes the likelihood that customers trade profitability by using pretext terminating customers' accounts, misleading assessing commissions that reduce customer account equity, and secretly they use specialized software to cause customer orders to be executed at worse prices than appeared to the customer at the time of the order. And this is crazy, and handicapping the extreme small number of successful customers to decrease customer profits and increase customer losses. So the more you lose, the more they're going to make. In fact, they're making sure that you lose by putting in your order at a worse price compared to what the actual number is. So they've also said that anyone offering and entering inter-leverage retail Forex contracts without registration, so they're not even registered, which is
crazy.
I mean, we talk about red flags, not registered, or offering or entering into leverage retail commodity contracts off exchange is acting in clear violation of the law. So that's the report from the CFTC. So there's no way you're going to win.
No.
Right. This is when we talk about retail investors and we talk about uneducated investors. These are some of the things that they're looking for. To have 135 people in there in a fund that's unregistered it sounds almost unbelievable, but we see it more than not.
And probably only 2 to 3% of the people are winning. And then, I mean, that'll bring us to the red flags portion. If you don't know anyone that has worked with a prop firm for 2 or 3 years and they haven't had funding, like as big as Forex is, I never knew 40 people that got funded and kept their liquidity out of all the thousands of traders. So even when we go back to episode 70, shout out to all the Forex traders I may have upset. I wasn't as wise as I am now. I apologize. These are some of the threats you have to look out for, because a lot of times when you're trading, you're not just battling other traders. Like even now in the futures market, I was talking to a few people at InvestFest. They're stop hunting like crazy. Like even when I'm starting to place orders now, I'm having to place my entry, let it go up, and then place my stop in after, because it seems like as soon as you put in your stop, it'll hit the stop and then go to the direction that you thought it was going to go. And a lot of times it's these firms that have access behind the scenes that can see where retail traders are placing their trades, and they're wiping out your orders. So you have to be very careful. And also, if you don't know anyone that has success with them for a 3 to 5 year period. I get it. Traders lose, things happen, but you don't have 10 success stories and you've been running for 3 years. That seems kind of shady to me. And for all of my futures traders, you need to go ask, if you are with a prop firm, can I talk to 10 or 15 people that are funded, that has been funded with you for a year, to make sure that the same thing is not going on? Yeah. There's no easy capital. Like if someone says, hey, I'm gonna give you $900,000 if you pass an evaluation for $200, more than likely it's not legit. Because if so, so when we went to Wall Street, did you hear anybody on Wall Street ever mention any of these prop firms?
No.
If it was that easy, well, we have 70 shows. It's not that effing easy. I'm gonna make sure we stay monetized for the first 15 minutes of the show. Please be mindful in a transaction if you are being taken advantage of, or if it's for your benefit.
Yeah, and that's education in itself too. I know we kind of just breezed over limit orders and market prices, but limit orders is the amount that you're saying that I'm not going to pay more than, right? Yeah. So if the price to execute is $17.05, you're saying that I want to buy it at $17.05. That is my limit. I'm not going higher than that, right? When you have a market order, then that means that whatever the price is at the time of the trade being executed, that's what you're paying. And so if you saw it at $17.05, and by the time the trade was executed, it went up to $7.15, that's what you paid. And so when they're doing things like this and manipulating it, I mean, obviously, if you had one thing set in mind on your computer screen, that when it got executed, it changed, you can see where there's going to be a lot of profitability that's going to be lost because you lost right from the jump.
Yeah.
The win was not built in.
Yeah. If you're a Forex trader and you got caught up in this, you can bounce back, use a high risk to reward ratio. So you can go for, maybe we can get Jess back on in a couple weeks, but go for a high risk to reward scenario. Risk 1 to make 20, 1 to make 50. And it could always be worse. You could have woke up like Logan Paul did yesterday. Next subject. My boy had a rough day yesterday.
What happened with Logan Paul?
We cannot divulge here. I'm gonna let them do their Googles. Yeah, okay. It will be inappropriate. And then if I say it's inappropriate, it's bad. It's bad. Yes.
So what are some red flags that retail traders should be aware of when investing in similar type of funds?
The first thing I would do is I would want to talk to, or at least see a webinar of the CEO and see if he has a trading background, what his pedigree is. So if he came from a big firm, what was the iteration for, like, what was the reason for the idea? Number 2, I want to see what is the probability, and if they walk you through a path to actually get funded, will they tell you how to pass the evaluation? And also, if you're making this money with their firm, what kind of split do they have? So if they're entering you in a 50-50 partnership, 60-40, great. I've seen some firms that will give you 95% of profit, but it's like, if they will give you 95% of profit and only keep 5%, more than likely, that's not a scenario where the financials are in their favor. They're not going to let you get through the funding process. So I will want to see like a background on the team, the CEO, the founders. After that, definitely I will want to talk to some people who's been through the process, but I want to see why they started the company. If they've only been around for 3 or 5 years, that's a no-go for me. But if they've been around 10, 15, 20, it's probably more legitimate.
Yeah. Can I just add another one to it?
Absolutely.
Guarantees. Anytime somebody says assured or guaranteed, that's like the red flag of all red flags. So even in the company line, the statement is they assured customers that your success is our business and we only make money when you do. It can't sound greasier than that, man. So like any type of guarantee or rest assured, or hey, these are the levels of returns we can promise you. All those things are red flags. In fact, if anybody is looking and like they're just beginning investing, if you see these type of things, turn the other way.
Stay away. And if they don't have anyone that's endorsing it, that isn't being paid, that is of stature, that's another thing I noticed too. Like, the people that I know that actually trade Forex at a high level, I never even heard them mention it before. So you have to be mindful. And it's a good lesson too for this era too. If you don't do good business, that business will collapse. A lot of people built a business model off of a zero inflation environment with so much hype. We can talk about it later. At some point, we have to have an acknowledgement that I was right about majority of NFTs. But if you're building a business based off hype alone, it won't last for the long term.
Yeah,
so
hype, guarantees, overly consistent returns. That's another one.
Yeah, like if you're at 10.256% return every month, like bruh, Bernie Madoff was giving people 30% return when the market was melting apart going long.
Yeah, that's what I'm saying. You're having these guarantees no matter the direction of the market or the economy.
Yeah.
Another red flag.
Yes.
Another red flag.
Big red flag.
Big red flag.
If it sounds too good to be true, it usually is.
It is.
It's a fact.
Because all the banks would have eaten up all the capital that would have been allotted there. Like, I mean, we've seen it with BlackRock. Like, BlackRock and Blackstone had amazing returns, and they took the motto of every real estate developer. They was like, let me just buy every building. Great. They wanted to play Monopoly as well, when traditionally they wouldn't even be in that business. We can talk about that later too, but because they're starting to dip their toe into that Bitcoin ETF. But like, if you don't see big players in a space, there's usually a reason why. There's usually no money there.
Yeah, for sure.
You never heard Diddy be like, yo, I'm finna get capital for the album from my Forex funds. You don't think Diddy wouldn't have got $9 million to do the album from there if it only took $200 to go get $2 million worth of capital? Like, man, the hustlers are going to go get the money regardless. If you don't see any legitimate players, Robert Smith never said anything about my Forex funds. So do your research and listen to what the big dogs say.
Yeah.
Yeah, for sure.